This video is brought to you by Brilliant. If there's ever a Prime Minister you want to avoid being compared to, it's probably Liz Truss. She presided over a disastrous mini-budget that elicited huge backlash in the press, had the media measuring her tenure against a lettuce, and ultimately went down as the shortest-serving Prime Minister in history.
I am a fighter and not a quitter. I am resigning.
Unfortunately for Chancellor Rachel Reeves, this week some economists have made this exact comparison, arguing that her budget may spark similar investor backlash as Truss, and that it could trigger a smaller scale repeat of the market chaos that followed the mini-budget. So in this video, we're going to have a look into this claim, starting by going through exactly how Truss caused market chaos, before moving on and comparing what Rachel Reeves aims to do in the budget. Before we start, if you haven't already, please consider subscribing and ringing the bell to stay in the loop and be notified when we release new videos. So let's start with a quick reminder of what happened with Liz Truss. Back on the 23rd of September 2022, Liz Truss's Chancellor Kwasi Kwarteng presented a ministerial statement entitled The Growth Plan, or as the media quickly dubbed it, the mini-budget. The title was, though, something of a misnomer. Nothing in its scale or impact was mini. In it, Kwarteng had included roughly £45 billion worth of unfunded tax cuts, including the bringing forward of a 1% cut to the basic rate of income tax, the abolition of the highest rate of income tax, the reversal of a planned increase in corporation tax, and the reversal of a planned increase in national insurance. These all came on the back of a very generous energy support package that essentially capped household energy prices at £2,500 a year, which, depending on how oil and gas prices would move, could have cost up to £150 billion. While Truss's theory was that the tax cuts would eventually pay for themselves by stimulating growth, this combination of unfunded tax cuts, accompanied by some pretty steep spending increases, really spooked the market. The pound fell sharply against the dollar, dropping below $1.09, the lowest since 1971. More importantly, though, the plan spooked the gilt markets, resulting in a spike in gilt yields, which eventually forced the intervention of the Bank of England to try and stabilise the situation. Now, for context, a gilt is basically the British word for a bond, financial institutions that the government uses to borrow money, whereby the government agrees to pay a fixed interest rate to the investor until the bond reaches its maturity date, whereupon they also pay you back the face value of the bond. So, if for example you purchase a 5-year gilt, the money you spend, known as the principal, will be locked away for 5 years until the gilt matures, and you get the money back. But the government instead pays you interest, usually referred to as a coupon, at regular intervals. Anyway, to fund both her tax cuts and her energy support package, Truss was going to have to issue a lot more gilts. But the market quickly made it clear that if she wanted to do that, the UK would have to offer very high interest rates. In other words, people saw what Truss was doing and decided that they didn't really want to lend their money to this UK government. The Bank of England was eventually forced to intervene, buying up tons of gilts to stabilise prices, and Truss was out of office a few days later. Anyway, the lesson that the British political class learnt from the Liz Truss experience was that the UK just can't borrow that much more money, that the market just doesn't have the appetite for more gilts. And this is why Rachel Reeves' upcoming budget has provoked some anxiety in certain quarters. Certain commentators and economists worried that, if she borrows more money, as she apparently intends to, she runs the risk of triggering another Liz Truss-style crisis. Even if the sums involved aren't as big, Reeves and Starmer do occasionally make the Truss-esque claim that growth will cover any holes in the public finances, and gilt prices are already rising. So, is this fair? Is Reeves risking a Truss? Well, as we see it, no. Not only are the sums involved way smaller, but the Liz Truss crisis wasn't just about borrowing. There were a whole load of other exacerbating factors. For starters, markets really didn't like Truss herself. She famously enjoyed what became known as a moron premium, after she fired the Treasury Permanent Secretary Tom Scholar for resisting her plans and told the Office for Budget Responsibility not to publish their forecast alongside her budget. Second, the spike in bond yields that Truss oversaw was in part driven by what are called liability-driven investment schemes, or LDIs. Now, LDI schemes are effectively a way for pension funds to hedge against interest rate rises. We won't get into the technical details here, but effectively, as gilt prices fell and gilt yields increased, LDIs required pension funds to sell off their gilts. Because pension funds account for a pretty massive share of the overall gilt market, this pushed down gilt prices overall, creating a doom loop. Third, the Bank of England had just announced that it was about to engage in quantitative tightening. In other words, selling bonds that it bought up after the 2008 crisis back onto the market, which was always going to push prices down. And fourth, bond prices were rising across the world as central banks raised or prepared to raise interest rates. So how much of the Liz Truss crisis was actually about more borrowing, and not just about the more on premium, LDIs, quantitative tightening, or the general rise in interest rates? Well, it's hard to know. But according to a recent analysis by Sushil Wadawani at the Centre for Economic Policy Research's Vox platform, the answer is not that much. At least according to Wadawani's research, the borrowing itself accounted for less than a quarter of the total rise in gilt yields under Liz Truss. In other words, more than 75% of the gilt market crisis was caused by the more on premium, LDIs, quantitative tightening, and the wider rise in interest rates. This is fundamentally good news for Reeves. It suggests that she doesn't need to be that worried about borrowing a bit more. As long as the markets don't think that she's as bad as Liz Truss and the Bank of England doesn't do anything funky, they'll probably tolerate a few more £1 billion of borrowing. All in all, scary as the Liz Truss experience was, there's reason to think that the British political class has learnt the wrong lessons from it, or at least inferred too much. Lots of things conspired to make Liz Truss's crisis quite as catastrophic as it was, and as long as Reeves is more sensible than Kwasi Kwarteng, which doesn't seem difficult, she probably shouldn't worry too much. Now, what's something that the TLDR audience have in common? They're willing to learn something new every day. And while our videos are a pretty good start, a lot of stuff we talk about can seem pretty complicated, especially when we dive into analytics and detailed data. Luckily, there's a fun and easy way to learn more, which also doesn't cost thousands of dollars or take years of schooling. That's because Brilliant is the best way to learn by doing, with thousands of interactive lessons in maths, data analysis, programming, and AI. Each lesson is filled with hands-on problem solving, broken into tiny accessible chunks, designed around your busy schedule. This means that by spending just a few minutes a day, you can accumulate new knowledge over time in an actually fun way, and you'll also feel the satisfaction that comes with bettering yourself and staying ahead. For instance, perhaps you promised yourself that this year you'll learn some programming skills, but there just hasn't been enough time, and the year is now coming to an end. Brilliant's growing number of programming courses are a great way to build foundations and learn real-world applications with courses on Python, essential coding elements like loops and variables, and even developing your mind to think like a programmer. To try everything Brilliant has to offer free for a full 30 days, visit brilliant.org/TLDR or scan the QR code on screen, or you can click the link in the description. That way you'll also get 20% off an annual premium subscription. Thanks for your support.